Welcome to Drill Down Earnings. We have fiscal second quarter earnings from Workday. The stock is really flying in this. I'm going to give you the business story behind the stock and the move. I'm Cory Johnson, the Chief Market Strategist from the Futurum Group. When we look at Workday, this company matters so much, not just in HR, which is kind of where they built their main products, but also in finance and other operations. This company is growing really steadily, and we saw it in this quarter. But some interesting changes. Let's dig in a little bit here, the business behind with the actual numbers. So $2.05 billion in revenues. That's up about 17% from the same time last year. That's a slight decrease in the growth rate from the previous quarter, but not much. We've seen a real steadying of growth here. Subscription revenues, which is most of the revenues for this business, of $1.9 billion, also up 17% for the year. And the company is profitable, $111 million in profits, which was not always a guarantee from this company. Operating profits, making money, wasn't the goal for a very long time of this business. So a 5% operating margin, not much to write home about, but clearly the trend, which we've seen in every one of the last 5 quarters, shows this company making money. And that was the emphasis of this call, and this quarter, and the guidance going forward is saying, hey, we are in this business now, not just for growth, but really for profits. And they're going to tweak some things, back off on some growth initiatives, start collecting some of the cash from the money, the businesses that they've been in for a long time. It's a significant change. Of course, the CEO has taken over from one of the founders in the last 2 years, really, a slow rollover into this new CEO, Carl Eschenbach, and that's the focus now. Now, subscription services, of course, still the vast majority of the business. But when we look at their backlog, that's the number that really tells us what's going to happen, not what just happened, because that's of course the business that they have booked and they're waiting to collect the revenues on. And that backlog number increased by 4%. They even give us the 12-month backlog, the CRPOs of 12 months, if you want to model it with all those acronyms, and I do. But the 12-month RPOs backlog was up 3%. So not as much as the long-term backlog. You can look at that 2 ways, slowing growth rates in the near term, but better growth rates in the long term, locked in already into this business, even as revenues grow. So the stock market loved these results. The stock was up about 11% after these results came in, which the stock had been flat for the last year. So the entire year's gain you got today. CEO Carl Eschenbach, as I mentioned, talking in the conference call, explaining about backing off on growth spending and why actually throwing off some profits is a good thing for this big tech company.
One of the things that's really important as we think about driving operating margin expansion, by doing so and becoming more efficient, it allows us to continue to invest back in the business across both technology, go-to-market, and potential acquisitions. It all comes together through this durable growth that we're mapping out over the next few years.
So again, growth for this company, I thought it was really interesting for me, having been around this story for a long time, that they joined the Fortune 500. One of the founders of this company, Dave Duffield, also started PeopleSoft, which before was acquired by Oracle, was also in the Fortune 500. I can only think of 2 people in the history of American business that have started 2 companies, and there may be more. Please hit me up on Twitter if you can think of them. But I can only think of 2 people who started more than one Fortune 500 company, Jack Dorsey and Dave Duffield. So this achievement by Workday is a big deal indeed. But that's not a number. I've got a number, the one number that means a whole lot, the Drill Down Bite, right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Workday just reporting Q2 earnings. Here's your essential summary, the numbers that you need to know. Was it the $2 billion in revenues? No. Was it the 17% growth rate? That's worth noting. It's kind of flat. But this business is making money. They have operating profits now 5 quarters in a row. 5% operating profits, maybe not something to write home about, but it shows the trend for this business. And in the conference call, they told us that trend is going to continue. They're going to focus on profits, not just growth. Thanks for listening to Drill Down Earnings. I'm Cory Johnson. And you can check us out on 6.5 Media's YouTube page, and of course on Instagram and on TikTok at Drill Down Pod. We've got lots more, and of course, check out more on X, used to be called Twitter. Leave me some comments. Let me know what you think at Cory TV. Drill Down Earnings, part of 6.5 Media.